Hey guys, it is Wednesday, July 1st. I want to show you what we were talking about in the room this morning about the CME Group and their new options tool. It's new to me anyway, that will show us that implied volatility bell curve. So I'll show you that. And I did figure out that you can set it to the session ending period. So for your contract, September 20th, it would be through the expiration of that contract, or you can set it to a monthly or a weekly period. So it's based on implied volatility. So that gives us a lot of information. First, just understanding is the volatility rising or falling, um, providing the range, contraction or expansion. And then we can look at their period termination of that end of the session period. So let's take a look at that first. The our run gap RTM template. I took the momentum BB mom off. I left momentum on, but I took off the Bollinger mom because in a trend you don't want to be restricted. So just be aware that you can put that on there. It's on your template for this version. If you want to, I'm taking it off of mine probably. Um, yeah, but depending upon what type chart you're going to be running. So as we saw earlier, we've separated the 1 minute to the 5 minute chart um, for some conditions and on a template, and we can do that between the two for those filter conditions. So we'll take a look at that in the morning. What I really wanted to show you guys right now is the volatility indicator on the CME Group's website, and this is the expected range um, volatility for options. First, you want to select your product. When it comes up, it defaults to soybeans. So you can come up here and change it to the equity indexes, US indexes, and then move over here, select NASDAQ. That'll get this to start running, and there's the NASDAQ. It defaults to open interest, so we want to change it to intraday volume. See the little thing spinning? Very good. And so now we've got the expected range volume, but I want it for the intraday period. Remember, we trade RTH session. So we want to just drill down to the intraday expected range for the volume for these option contracts, for these strike prices. You can click inside the box and get your range. So here's your PT1 on our PT indicator. It's a dash line. So PT1A and B above and below the median. And you can see the current volatility level is 26.58%. And the expiration is expected to have the range of 8,900 to 11,393, thereabouts, 68% of the time. So the 123 is right here. This is the one. Then your PT2, getting out to that second deviation box. Oops. Second box right there, right here. And so that's a current volatility, our current volatility level of 2658. Your range widens out to 7866 to 12890. And then your PT3, that third leg, gives you the range. But instead of having to click on the box, you can see it right here. Here's your 1, here's your 2, and here's your 3. And the information is you want to see if you're trading inside that bell curve because you get that rotational up and downs back and forth. They can get to the one and they go all the way back, back and forth like a ping pong, right? So you want to be paying attention to the trajectory that price is moving in. Do you have another filtered condition like what we're looking for, higher time frame trend, this or that, to help guide us to see if there are going to be opportunities for a directional run to that second deviation level. And once you break out of the one, this is where your option contracts are going to be. You're going to get all your calls or puts on this level going to that next deviation level. So that's where they're trading from the left to the right of this box right there. That's the sweet spot. And if we can just limit our trading to this range um, with our tools to provide us that direction, that will provide the best opportunities. Now, I want to start putting these levels on the chart as support resistance. So we can now hand draw the chart. I'm going to have to get with Adrian, see if we can get the indicator updated to put the implied volatility levels from the CME. I don't know if they'll give us the data for this or not on an intraday streaming basis. I'll have to check to see if we get that now through NinjaTrader, but that would be awesome because then we would know where the option contracts are sitting. So, for instance, we can see the option contract. Um, so you can look at a weekly contract and look and see where the put calls are. So, like right here are the puts and calls. So here's your median, and then you'll see the option contracts, the calls sitting right there, and there they are. You can see what your open interest is and your volume for those strikes at the price and of these various levels. So here's some more probably calls sitting right there. Well, a little bit of a mix. Actually, it looks pretty even. So you've got traders trading it back towards the middle, um, and not very many people pushing it out. Interesting. So this is for the week expiring tomorrow or today. Tomorrow, Thursday, tomorrow. Okay. Well, weekly, monthly, you can set what are end of month. That's a good one. So we can see now it's July 1st, but if we look at the end of month range, this is what we should put on the chart also. That monthly standard deviation as well as that 1 2, and I bet that you would get some reversals here too, since everything is going to be status quo in the market. But what I would like to do is incorporate these levels with our PT123 levels, and that'll be very exciting. So I can go through the implied volatility levels and hand draw them on the chart. A few of them, not every day or anything. Maybe I can get Adrian to update the indicator. That would be cool. But definitely check this out. The CME Group got a lot of new tools. There is drop down box, more pricing and volatility tools, and there is a great economic event calendar that shows you these option strike prices. Here they are. So their expirations. So we can keep our eye on the 2 year and see what the Fed's up to. We can also put that on the market analyzer. But be watching these weekly and monthly strikes and see what's happening. It's going to be flat, right? So they're setting the target, they're setting the spread, they're telling us it's going to be like that. So that's going to give the equities that low drift up or flat, but just a very narrow range. So I wouldn't expect to see, so it will be an up and down range, but very controlled range area. So being aware of where these levels are for the options will be pretty beneficial, I would think. We'll check it out. So we'll see you in the trade room tomorrow. I just wanted to give you the heads up. Go over to the CMEgroup.com, look up these tools. I think that pricing, volatility, and strategy tools, there's a lot of them. You can get your term structures, quick volatility to show you a range, a projection for volatility. Here is a asset correlation tool that's pretty cool. It kind of looks like a heat map at first, but it's just a correlation heat map. But so check that out. There's some other things, and it's all available at the CME's website. So I think that we've got, bingo, right? We can incorporate this with what we've got with our RTH daily and intraday levels and know where to watch for the market to respond. Okay, see you tomorrow. Thank you so much.